In this video, we share the bad habits we see holding traders back. If you have these bad habits and do not fix them, then you will fail as a trader. We identify these P&L stifling bad habits and offer solutions to fix them in this video. So if you're wondering why you're underperforming as a trader, perhaps it's because of some of these bad habits. Maybe you didn't even know these bad habits were holding you back as a trader. And perhaps we can help you with a solution or solutions that we suggest to our prop traders in New York City that will help you grow your trading account. Hi, I'm Mike Bellafiore, Managing Partner of SMB Capital, a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. Click our subscribe button so you don't miss any of the trading videos that we're producing for the trading community. In this video, you're going to learn the bad habits holding traders back. You're also going to learn how to combat trading while overconvicted, how to improve your overtrading, how to adapt to changing markets, how to focus on the process over P&L. For those of you who want to learn how to improve your trading by eliminating the bad habits holding you back as a trader, we hope this video helps. If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up the free registration page in a new window, so don't worry, you're not going to lose this video. Go ahead and check it out right now before you forget. What we're hearing from people who are reaching out to us is that you're going to learn more in a couple of hours from this trading workshop than from years of online education. Bad trader habits in 2018. Again, this is stuff that we're seeing on our desk or from the really big 7-figure traders that I'm working with outside the desk. Convicted. Overly convicted. Bad habit in 2018. Overtrading. Bad habit in 2018. Failure to adapt to market changes. Bad habit in 2018. Really big challenge for traders across products with the increased volatility that we saw last year. How do you adapt when volatility goes from historically low and historically low for a long period of time to really periods where VIX was even above 20 for sustained periods of time? Totally different markets, totally different attacks for how you express your ideas in markets, and you have to adapt. Focus on P&L, bad habit in 2018. So specifically, let's talk about the danger of being overly convicted. So on our desk, we have guys who get really good. They become 7-figure traders over time. The particular trader who I'm going to talk about net of $4 million last year in trading profits. Net of $4 million net in trading profits in 1 year. That's not how much he's made in his entire career. That is what he did last year. And this trader is still getting better. His goals are much higher than net 4 million plus in yearly P&L. But, and as Seth mentioned, what is different about a P&L desk like ours and what is clear when you walk the halls of SMB Capital is we're always trying to get better. Our best guys are always trying to get better. Where they're at's not good enough. And this particular trader is tremendous. I mean, that is tremendous performance to put up that type of P&L as an active intraday trader. Tremendous. Now you're talking about one of the truly best active intraday traders on the street. But this particular trader gets overly convicted in ideas. Now, one of his strengths is his conviction in certain ideas. One of his strengths is lots of confidence that how he sees a particular setup is correct. So you don't want to take that away from the particular trader. You don't want to take away what somebody's doing really well and change it too much. But
you do also want to help the trader understand when his strengths become his weaknesses. And this is really true of big traders. Now think about big traders. They're putting huge amounts of capital to risk at very definitive points in time. If you're an active, really large, multi-million dollar plus intraday active trader, and you're putting your money to work at the wrong time, or you're entering a little bit too early, that timing can be the difference between losing a lot of money and being that really outstanding, outperforming, sustaining, elite, active trader. Just that timing. And it doesn't have to be by a lot. You can be a half a day off in your timing. And the results can go from getting crushed, taking a big rip, to really catching a huge profitable trade. And so this trader needs to work on how to keep his strengths but minimize his particular weaknesses. And so, one of the things that he's working on, because he recognizes this needs to get better, is a solution, a very specific solution to how he's going to get better. We don't just sit around and say, oh, I want to have a little bit more willpower during the real time when I'm trading. Oh, I just want to be a little bit more disciplined in real time while I'm trading. Oh, I just want to eliminate the trades that aren't so good for me. Oh, I just want to save my firepower when I'm really right in a trade. As somebody who runs a proprietary trading firm in New York City, I have no fucking idea what that means. Okay? And neither should you. I have no idea what that means. Those types of statements are statements that are made by people who do not sustain as professional traders. In fact, they're made by people that never really become elite, active, short-term professional traders, or professional traders in anything for that matter. It's not specific enough. It's not specific enough. It is a type of language that is made by people who don't make it. It's not good enough. But what we do here, even for somebody who is at that elite level, and I'm sure everybody listening to this broadcast right now does not make the type of money that this trader makes. I am positive of it. Talk about a good risk-reward trade. I'll take that trade that none of you listening to this are at that level. I'm sure there's going to be one person. I'll hedge a little bit. Maybe there's one person, okay? And if you're that person, please reach out to me. I'd like to talk to you because you're remarkable. But what he does, and this comes from his yearly review. We're sitting in a room like this. He is surrounded by his team members, and he's laying out in full transparency the solution so that how he can make more than $4 million net this year. And for him, that means to rate his self-talk each day. So during the day, he talks to himself about the trades that he's in. Am I too early in the trade? Am I overly convicted in the trade? Is this showing me that my thesis is actually starting to work? Is the tape starting to confirm that the trade is about to happen? Is the chart setup confirming that my thesis is correct? Is the price action confirming that my thesis is correct? It's not just relying on your thesis. And so that's easy to do when you're a very successful trader over many years. You're used to being right. You're used to winning. You're used to being a champion trader. And so just sticking your neck out there thinking, I know best, is going to get yourself in a lot of trouble. So you need to talk to yourself during the day. You need to check yourself. Am I in a good trade? Is this one good trade? Is this setting up? Is this an A+ trade in my playbook? Am I getting out in front of this too early? Okay, and you create this self-talk into a habit. So we talked about it at the beginning, effective best practices turned into habit, they compound, will drive your performance in 2019. This trader, if he wants to get better, even at the level that he's at, has to get that self-talk to become a habit if he's going to improve in 2019. Overtrading. We all do it. We all mutter under our breath. shouldn't have taken those trades. I trade too much. If only I could eliminate some of the lesser trades that I make. If only I could put more risk on for the trades that are my A-plus setups. And there are a lot of independent and retail traders out there who really have a lot of good in their trading. They don't make money, but they have a lot of good in their trading. What I mean by that is they do have trades where they do make money. If they were to tag and measure certain trades, those trades would have edge. But they mix them in with too many of the lesser trades. They mix them in with too many of the lesser trades too often, and that completely disrupts their results. It changes their results. It changes the type of trader that they are. And so this is something that they have to overcome. But you can't just sit around at a trading desk and say, I wish I didn't overtrade. This is the year that I'm going to will myself to overtrade. Willpower is completely overrated. There's a lot of science that has been written of late on this principle. Don't rely on willpower. It is going to disappoint you. I'm just going to trade with more discipline during the day. I'm just going to trade those setups that I really like the best. Again, sorry for my expletive deleted in the last passage. Same response. I don't know what that means. That's not actually how you get over this issue. What you need are solutions to overcome this bad habit. Build a playbook. It just so happens that the person you're listening to wrote his second book with the title, The Playbook. You might want to go actually read that and figure out how to build a playbook if you don't already. Check out our blog, type in the playbook, it'll show you how to do them. The playbook helps you build your trading business. It's all the setups you should be taking. It's an exercise that you do so that you're internalizing the trades that you should be making. It's a way of crafting your business to build from your strengths, to keep the P&L from your good trades and minimize the negative trades that come with your lesser trades. You sort out, here are the trades I should be taking and here are the variables for those trades. And when I see it, now I'm an executor and I'm an observer. Oh, that's a gap and go trade. I'm very good at gap and go trades. I should put some risk on because I've measured that I have edge in those trades and I've playbooked it and I know exactly what to do. Oh, that's an opening drive play. I like opening drive plays. I have edge when I trade them. Oh, that's a backside trade. Look at that. Here are all the variables that are lining up in this particular trade for a backside trade. Let me make that trade. Okay, as opposed to, and this is all too common, there's one trader who works at a big bank who I am coaching right now outside the firm who was disappointed in a recent trading opportunity that he felt like he missed. And we went through his work and I suggested, hey, was it that in real time that you missed the trade, that you wussed out on putting on enough risk, or was it that you didn't game plan prior to that what you wanted to do for this particular setup? If you were to have game planned in more detail, would you have done differently? And he would have, and that's a great best practice to turn to habit. But the idea is you're trading this playbook, you're an observer, you're an executor. Daily report card on overtrading. Again, if you don't know what the daily report card is, so one of the things that we do is we pick one goal, we work on it intensively, in detail, and we give ourselves a grade on the things that are important to us. And so if you want to get better at overtrading, create a daily report card where you're judging yourself on this new bad habit that you got to get rid of in your trading, overtrading. Self-talk, just like the trader before us. Talk to yourself during the day. Is this one good trade? Is this something that's outside my playbook? Is this something in my playbook? Accountability from a team member. So we trade in teams. We share with other team members what our strengths and weaknesses are, and they can chime in and say, hey, Mike, remember, you're supposed to be limiting your overtrading. That's a trade I know that you don't like so much. And then you talk back and forth. Okay, and so look, sometimes the trader's in a little bit of a bad mood and might tell you, hey, buzz off, mind your own business. But on good trades, on good teams that are coached well, you appreciate the fact that there's somebody else looking out for you to do better. Set max trades for the day, open, midday, close. So lots of elite traders that I work with have maximum amounts of trades that they're going to do in each session. They divide the trading day into 3 sessions. There's the open, the midday, and the close. And they even though they are really highly profitable traders, there's a max amount of trades that they can take for each session. That's a solution. Setting that max is a solution. And mindfulness training. So I've been saying this for the last 18 months. Mindfulness training is an essential best practice that people need to turn into habit. This is something we expose our traders to on our desk. Spend at least 10 minutes working on mindfulness training each day so that you are more open-minded during the trading day, so that you intake data at a more proficient level, so that you are more of an observer and you take trading less personally. So there's a really good app that we recommend people go to called Headspace to get started on this particular training. I think when I was young, nobody used to work out. It was rare for people to go to the gym or run. You were ahead of your time. Today, it's pretty much universal that you ought to work out regularly. In short order, doing mindfulness training is going to be as accepted as one of those things you should do every day for your health as exercise is today. So start now. You'll be ahead of the curve. Failure to adapt to market conditions. So markets change. Last year, we were challenged with a different market. Before that, we had this very regular period of historic low volatility. Certain strategies work well in certain regimes. I can tell you on our desk, one of the things that we do is we teach traders to gravitate towards stocks in play. And what that means is find the stocks that are most active, that are receiving the most attention. A good measure of that is RVOL. So go find things with elevated RVOL, elevated relative volume. That is showing you that on this particular day, there's much more volume being done in the stock than there is on normal days. Therefore, it's confirming that lots of people think your AM preparation, that this is going to be something really in play, is in fact in play. So we create a whole strategy towards trading these very particular stocks. We don't generally trade market stocks. We don't generally trade SPY or Q or IWM or volatility products like UVXY or VXX. We normally stick to stocks that have a news catalyst and are really in play. And we have a whole curriculum based on this. And it takes a lot of time to put together that curriculum. And then, lo and behold, and we put this together and shaped it for essentially 6 years of a marketplace that traded in a certain way. We want our guys to do well in the present environment. If we were to have our guys as equity traders going ahead and trading SPY and UVXY and VXX every day, they would certainly lose money. That would not be the way as a short-term active trader to best trade in a low volatility market. And then we shifted. The market shifted. And what do we do here? We completely changed what we taught. And we spent a tremendous amount of time teaching our guys how to trade marketplace, how to trade SPY, how to trade volatility products, how to trade Qs, how to trade IWM. And for long periods of time, we would trade just those products. We scrapped trading the stocks in play. It's almost like we took our training program and we put it aside and we said, we'll dust that off when volatility gets low or not. And for us, when volatility gets above 15, when VIX is above 15, we start to look at marketplace. When volatility is above 20, we stop looking and we start immersing ourselves in marketplace. That's all we trade. because then the market overall becomes in play. Because then that volatility, that movement in markets is where we want to be. And so, adapting to markets. What's the time frame that's winning in the market you're trading? When VIX is elevated, we're trading market plays. What concerns the big money traders? If low floats are working in low volatility environments, but not when volatility rises, we'll adapt. Okay? If you're shorting VIX during this, if you had been shorting VIX during that extended period of time, and now it's not working well, okay, you're gonna be challenged to either do less of what you were doing prior, pick your spots better, to when you're shorting volatility overall, or add some new things. But that's a very common thing that traders are challenged with. All right, focus on P&L. Bad habit that people gravitated towards in 2018. And so to me, P&L is an arbitrary number. We've had guys who used to make consistently $4,000 to $8,000 a month who wouldn't get out of bed for that kind of money. They would, if you told them you're only going to make $8,000 in a particular month, they literally wouldn't show up. They are interested in making hundreds of thousands of dollars a month, and if they can't, you're not interested in them. And so, but they used to make these small amounts of numbers, and we're ecstatic about that. And when you start, that would be terrific. If you made $4,000 or $5,000 a month when you started, that would just be awesome. But those numbers will go up if you keep working at it. I see, and what we see are traders who are focusing on the process to achieve their goals, having the most success. And I want to make this really important point. And so, one of the things that we do here is we challenge our guys to put together their yearly goals. And we say, make your own. We give them a template for how to attack their yearly goals. And I will challenge guys who I coach outside of the firm to do this as well. And something that I've been observing, which is just so striking to me, is that pretty much, and I didn't think this was going to be so drastic. I didn't think this was going to be so stark when we started to suggest for people to do this. But there's such a correlation, with a couple of exceptions, but I think this is true of a large majority of traders. There's such a correlation between the quality of work that people are willing to do in things like their yearly review and things like their monthly review. Our last guy to be a seven-figure trader, his yearly goals are 38 pages. He sends it in a PDF file. I don't know why he sends it in a PDF file. Maybe he doesn't want anybody else to see it. The level of detail in his work is not, I want to combat my overtrading. There is voluminous statistical record keeping of what he's done well and how he's going to do more of it and more of it bigger. There is tremendous thought and detail about strategies that he's going to add to improve his business. There are very clear solutions to how he's going to eliminate some of his weaknesses. And then, I'll sort of be in a room like this, and then you'll see the guy who's struggling and tells you he wants to do better, talks a good game, and then you look at his yearly goals, and it's one page of dribble. It's one page of well-intentioned platitudes about how this is going to be a great year for him. No, it's not. No, it's not. And I know almost on the spot, based on the comparison between the guy who's a seven-figure trader who sets goals to be a $2.5 million a year trader over the next 2 years, and the work that he's going to do that, and the guy who isn't making money and has been here such that he's getting to the point where he may not make it, and he's rolling out his goals. And we love these guys. We love all of them, and you know, they are personally very nice people, but that's just not going to get done. And so we will say to people, hey, here's the work from one of the guys in the firm who made 7 figures and wants to make $2.5 million over the next couple of years. And let me share this with you. Here is his yearly goals. Compare them to your yearly goals, and I think they get the point. We don't need to yell and scream at them. I mean, this is the work of somebody who does really well. Here's your work. Compare. Here's the standard. Live up to it. And so, you know, think about that. I was actually, there's a video that I did a while ago, which I was watching back today. We're brushing up a particular training program called The Winning Trader. And one of the first videos in it is called Win. And it's an impromptu video that we shot with one of the new classes where I think you can tell I'm a little disappointed with their effort, and I'm a little disappointed with the standards that they feel they need to live up to that are below the standards that I know they need to live up to. And so I sort of bring them in this room and I talk to them about win the day. Be the guy who wins doing the best AM meeting. Be the guy who wins doing the best playbook trade. Be the guy who wins keeping the best trading stats. Be the guy who wins in terms of talking to other guys about trading. Be the guy who wins in doing back testing. Be the guy who wins in building filters. Win the day. Win every segment of the day that relates to you improving as a trader. For you, win the race of effective best practices turned into habit that compound, that will drive your performance and improvement in 2019. Win that battle and win it every day.
Hey, so go ahead and click our subscribe button so you don't miss any of the trading videos that we're producing for the trading community. And please add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.